Welcome to Cryp MoneyMan and today's news. Since the beginning of June, the growth in Bitcoin trading volume has stalled. The average volume in the last 30 days only reached about $5.9 billion, which is only slightly higher than the annual average of $5.5 billion, by about 7%. This narrowing indicates that trading activity is cooling down and speculative sentiment is also diminishing, even though Bitcoin prices remain stable above $100,000. Currently, Bitcoin is trading around $108,200 after a slight decrease in the last 24 hours. This shows that although the price remains strong, the volume momentum is weakening, reflecting increasing caution among investors. Such a divergence between price and trading volume often signals periods of strong volatility or downward correction, especially as traders become increasingly reluctant to inject more capital, even with a seemingly stable market. Although there have been times when capital inflows surged in the short term, the overall trend continues to show persistent negative flows on centralized exchanges. For instance, on July 5th, inflows only reached $25.64 million, a rather modest figure compared to the continuous outflow trend. The continued withdrawals indicate that large investors are moving assets to private storage wallets, rather than preparing for sell-offs. Historically, continuous capital outflows like this are often associated with accumulation or defensive positions. However, currently, there are no strong enough capital inflows to offset the outflows. Trading volume is also continuing to decline. This indicates that the market is in a fragile state, with liquidity steadily weakening. As a result, the risk of strong price volatility in both directions, up or down, is increasing. Currently, Bitcoin's NVN indicator has surged by 14.1% to 0.76. This is a warning sign, indicating that Bitcoin may be overvalued compared to the actual usage of its network. The NVM index measures the divergence between market capitalization and user activity, based on Metcalfe's law. When this index rises, while momentum and trading activity stall, it often reflects an accumulation of speculative factors. The price is being inflated beyond its intrinsic value. Although buyers remain steadfast in defending the $100,000 mark, on-chain signals are sounding alarm bells. Data from Sentiment shows that the gap between Bitcoin's price and the number of daily active addresses is widening, with a deep negative divergence of minus 175.79%. While Bitcoin's price continues to climb, the number of actual users participating isn't keeping pace, indicating a weakening in organic network interactions. Furthermore, transaction throughput does not confirm the upward trend, a sign that the bullish momentum may not be solidly supported. Recent trading developments indicate that the market is slowing down, with declining volume and low whale activity. This means there hasn't been significant accumulation from large investors. Meanwhile, valuation indicators suggest the market is in an overbought state, increasing the risk of a correction if sentiment reverses. Another concern is that user interaction isn't keeping pace with the price increase. This could be a potential vulnerability in the market structure. Unless these fundamental indicators show clear improvement, Bitcoin's ability to maintain its current price range remains uncertain. To consolidate its upward momentum, Bitcoin needs a real surge in network activity and a stronger increase from investors, especially in the current context where the risk of correction is growing daily. Next up, Ethereum is seeing a significant recovery in network activity, a sign of renewed market interest. According to on-chain data, the number of daily transactions has surged, surpassing 1.2 million, nearing the peak recorded in 2021. This increase coincides with growing interest in Ethereum ETFs, stable coins, and tokenized stocks. However, the crucial factor driving network growth could be recent technical upgrades, such as Petra, an important step that helps expand Ethereum's operational scale. Ethereum developer Azumbo Tony noted that current transaction fees, ranging from 5 to 6 GWI compared to over 300 GWI previously, are clear evidence of effective scaling. He shared, daily transactions are approaching historical highs. Congratulations, we have successfully scaled the positive outlook. Tom Lee from Fundstrat stated that the increased utility of Ethereum equates to an increase in ETH's value. Tom Lee recently joined Bitmain Emotion Technology to oversee the company's ETH treasury. And he's making big bets on stablecoins. According to him, This is the ChatGPT of the crypto world and could become the main growth driver for Ethereum in the future. In fact, on-chain metrics also show that the market capitalization and interaction of stable coins on the Ethereum platform are reaching record highs. Notably, investor sentiment has gradually shifted towards optimism. By the end of June, the percentage of long positions held by ETH traders decreased from 74% to 59%. However, entering July, this ratio quickly recovered from 50% to 64%, indicating that confidence is returning, especially among top traders on Binance. Nevertheless, in terms of price, ETH has yet to break out decisively. After bouncing from $2,300 at the beginning of the week, it encountered resistance around $2,600 and is currently trading at $2,500. A downside is the performance of spot Ethereum ETFs, according to analytics firm Optimism. Although these ETFs have attracted over $4 billion since their launch, this figure is still far behind Bitcoin ETFs, which have attracted over $30 billion, nearly 7 times more. According to Icon Magic, the discrepancy isn't in availability, but in the fact that Bitcoin has a clearer and more appealing message for institutional investors. Meanwhile, Ethereum still lacks a strong enough appeal. In summary, while network activity and on-chain interest in ETH are recovering, especially from retail investors, institutional demand is still lagging behind Bitcoin. To maintain its upward momentum and compete with Bitcoin, Ethereum needs more than just a technical boost. It needs a clear, compelling, and market-convincing narrative. And the last piece of news. XRP is showing strong growth signals as it approaches a critical resistance zone, with on-chain indicators and trader sentiment pointing towards a potential breakout. Currently, XRP is trading around $2.20, nearing the key resistance level at $2.38. This is not just a technical barrier, but also a psychological one that the market has defended multiple times in the past. Notably, the 90-day spot taker CVD index shows that buying pressure is clearly dominant, a sign that market participants are actively entering with direct buy orders. The growing confidence among buyers could be the catalyst for XRP to break through its long-standing price ceiling and move into a higher trading range. While active buying efforts are increasing, the bubble map indicator shows that spot trading volume is gradually weakening. This raises the question of whether XRP is lacking broad market consensus. If this trend continues, XRP's ability to achieve a truly sustainable breakout may be limited, especially as the price approaches significant resistance zones but lacks liquidity support. Notably, a positive signal is the NVT ratio, network value to transaction volume, for XRP, which has dropped sharply by 43.49% in the past 24 hours to around 0.95. A lower NVT index is generally understood as the token's valuation becoming more reasonable relative to actual network activity, implying improved utility and efficiency. In other words, XRP has a more positive on-chain foundation that could better support an uptrend. If technical factors and market sentiment align, XRP is at a critical juncture as its price approaches a dense short liquidation zone, which could trigger a strong price surge if breached. According to the liquidation heat map, there's a large cluster of short positions accumulated in the $2.30 to $2.38 range. This is a high-risk area where a price breakout could trigger a chain reaction of forced liquidations, thereby quickly pushing the price upward. This is due to the short squeeze effect. Currently, XRP is trading around $2.29, just a small step away from this zone. Notably, the presence of high leverage positions, 15x to 20x, further increases the risk of large fluctuations, indicating that the market only needs a strong push from buyers for the price to explode. On the daily chart, XRP is consolidating within a symmetrical triangle pattern with lower highs and higher lows. This is a classic signal that the market is in an accumulation phase and preparing for a directional turning point. This pattern is currently nearing its completion, suggesting that a strong breakout could occur soon. If XRP closes above the $2.38 resistance level, the triangle will break upwards, opening up a short-term target around $2.60. XRP is converging with several favorable factors. Buying pressure is increasing. Derivative positions are leaning towards an upward trend, and the NVT index recently dropped sharply, indicating a clear improvement in the network's fundamentals. However, spot trading volume is cooling down. This factor could hinder the uptrend if there isn't consistent participation from investors. And that's the content of today's video. I hope you enjoyed the information I provided. Don't forget to like and subscribe to support me in future videos. Thank you for watching my video. Goodbye and see you again.